Inflation is surging around the world at the fastest pace in decades, but prices are rising much faster in some countries than in others, even though all countries are dealing with the same issues: disrupted supply chains, higher fuel costs, and the end of COVID-19 lockdowns. So what makes the difference? Let's look at a few countries and some factors that have contributed to their varying levels of inflation. China, the world's second largest economy, is seeing the lowest level of inflation relative to its inflation rate before the pandemic of any country in the world. In fact, inflation was lower in China in the second quarter of 2022 than it was in the first quarter of 2020. But a major reason for that is China's economy has taken a big hit, largely from COVID lockdowns that began in early 2020 and have continued through this year. The country's economy, which had grown by 5 to 10% a year over the past decade, grew by just 0.4% in the second quarter. And it's on pace for one of its weakest growth years in recent history. The People's Bank of China kept interest rates higher than most throughout the pandemic, even as other central banks were cutting rates to help boost their economies. Mexico is doing better than most countries on inflation. Its inflation rate in Q2 was double what it was in the first quarter of 2020, but that's well below the average for large countries around the world. Its central bank started raising interest rates in June 2021, well before many other central banks, and raised them faster. Mexico's government spent relatively little in stimulus, refusing to borrow significant amounts of money to underpin the economy. Even so, the Mexican economy grew at a faster pace in the second quarter than it did in Q1 2020.
And grew at almost 4 times the rate of other large countries in the Organization of Economic Cooperation and Development, or OECD.
Inflation in the United States has more than quadrupled from where it was in the first quarter of 2020, putting it slightly ahead of the average for other OECD countries. And growth has declined in the first 2 quarters of this year. The US had the most recorded deaths from COVID-19 in the world, spent more than $5 trillion on stimulus programs, and its central bank cut interest rates to 0 and didn't start to raise them up again until March of this year. Greece has been one of the worst hit countries by inflation. In the second quarter, Greece's inflation rate was 28 times higher than it was at the start of 2020, and hit an all-time record. The European Central Bank kept interest rates negative throughout the Eurozone during the pandemic, even as the Greek government spent heavily. As in much of Europe, Russia's invasion of Ukraine has caused gas, power, and food costs in Greece to skyrocket. Like many Eurozone countries, Greece is seeing higher levels of growth than much of the world, but it's also seeing higher levels of inflation and unemployment. One common theme for countries with muted inflation was a fast-acting central bank. But it's not a perfect science. Japan's central bank kept rates negative through the pandemic, but it has seen limited inflation. Central banks around the world are now aligned in raising interest rates. We'll find out if that's enough to get inflation under control. Hip-hop legend Nipsey Hussle had some great advice for times like these. He said, "Follow my steps and you'll see what I'm about. I keep my money coming in and never going out." That's all for now. See you next time.